All right, now welcome everyone to another episode here at Meet the Property Guy, and we are already in the second month in 2024, and there are so much already that have already happened in this just in the past 50 to 40 days. And before we start analyzing real estate in 2024, I feel the first thing we should do is to look at real estate in 2023, look at the markets, what happened, and how the market was impacted and was affected, and how investors should prepare and position for 2024. In case you are coming across a video like this for the first time, this is Meet the Property channel, and this will discuss everything real estate for first-time investors, avid investors, and people who are just trying to learn about the real estate market in Lagos, the real estate market in Nigeria, and sometimes even the real estate market in Africa. So I would suggest this is your go-to channel. This where you get everything basically about land titles, land documents, property scams, real estate companies, which ones are legit real estate companies, which ones are fraudulent real estate companies, real estate clauses, real estate returns, real estate risk, everything. We dissect everything on this channel. All right. So after watching this particular episode, I also suggest you go to our different playlists. We have playlists on interview sessions. We have so much interviews on it. We have playlists on Q&A session. We have so much episode on it too. We have playlists on property investors, playlists on Ekpe, playlists on Ibejuleki, on CFO, on land documents. And we have so many videos, so many episodes under each of these playlists. All right, so let's go straight into the topic right now and look at real estate in 2023. Was the market slow? Was the market vibrant? And did real estate really did well in 2023, or real estate did poor in 2023? All right, so before talking about was real estate slow in 2023, if this is your first video, if this is your second video, if this is your fifth video on our channel, regardless of the medium you are watching us, either it's on your mobile phone, it's on your smart TV, it's on your iPad, we really want you to subscribe. We really want you to be part of our channel. We really want you to be a member of Meet the Property Guy. So kindly turn on, click on the subscribe button, turn on the notification button, so that as we are dropping these videos, dropping these episodes, you get notified and you don't miss any of them. All right. So 2020 was really a challenging year for every sector in Nigeria. And 2024 is already showing to be even more challenging. Just in the first 2 months that we are in already, we still can't, it's still long into the year, or we still short into the year, and there's still a longer period into the year, but it's already showing that it's quite challenging, and it's even more challenging right now for real estate and for real estate developers. And before we now talk about how investors should position, how investors should invest in 2024, particularly in the real estate sector, which will be my next video. We first want to look at how real estate performed in 2023. Now, we had a lot of changes in 2023. 2023 was when the Naira got floated. 2023 was when the first subsidy was removed. And all these affected real estate massively. Inflation was pretty high. Cost of materials, building materials gone up very high. Cement, reinforcement steel, tiles, electrical cables, roofing sheets, planks, everything really gone up. Even cost of labor, bricklayers, masons, welders, carpenters, tilers, interior deco, everything, their cost also went up very high, and this had a massive effect on the construction industry. A lot of projects that were scheduled to be delivered in 2023 had to be postponed because a lot of developers really didn't prepare for what happened, particularly what happened between May to September. The changes were very rapid. The changes were not really unexpected, but a lot of people did not expect it to get to the extent where these changes got to, and this had a massive effect on off-plan projects. This had a massive effect on even land projects in terms of providing infrastructures in these different estates, and a lot of people just had to hold on. A lot of people have to just close sale. A lot of people just have to dial down the planned infrastructures that they have there because they just couldn't meet up. And despite these different challenges in the markets, also particularly in Lagos, a lot of developers still did well. You know, they still delivered houses, they still delivered buildings, and this just showed us that regardless of what is happening in our market here, some model will work and some model will never work. Particularly for off-plan, it is now proven that if any developer is doing off-plan right now and is expecting funds from the people that purchased, that project will likely never get delivered. It's now proven 100%. For anyone that is looking at delivering off-plan right now, I think one of the things that you really need to ask is, how are the developers sourcing for funds? Because they must have a source of fund, basically, outside if clients pay that month or client did not pay that month. Because all our clients are paying every month or even every week can never deliver that project because inflation will continuously affect it. So a lot of developers that were able to meet up their project timelines, their project deadlines, there were people that had funding outsourced outside whatever that the client that bought that project were paying, and they were able to continue working at sites whether clients pay or client do not pay. And that's why these days I really am circling down and filtering down on the number of off-plan projects that I can tell investors. I don't care how much interested that you are in that project, I'm not selling. If I'm not confident with that developer, I'm not selling. I'll just tell you, just go on with your whoever that you want to go on with. It's a good location, it's a good project, that's it. It's off my neck. I'm not selling, basically. Because all these deadlines, all these timelines, when they are not delivered, most investors are on our neck, the realtor, basically. And another thing is for high-rise projects. For high-rise projects right now, if you bought any high-rise project in 2023 or you buy a high-rise project in 2024, trust me, the minimum that you can give that high-rise project is 2 years. And that 2 years is even for projects that maybe on the 3rd floor or on the 4th floor. But for a project that is maybe foundation, just give it 3 years or even give it 4 years. Trust me, that's how long it's going to take, because so many things are changing and all these changes will continuously affect developers. At some point, they will have to stop that project to launch another project so that they can raise funds to go back to that project. So that's why you need to always assess your risk and assess what you are going into. If you don't have the risk appetite, you don't have the risk appetite to do 4 years, to do 3 years, just buy something that is almost close to delivery. Maybe they have already done the roofing or they are doing the interior works. You can buy at that stage. You know that at least work is around 70%, 80% done. But if you are doing foundation when they are still 2nd floor, 3rd floor, and they are going to 6th floor, 7th floors, trust me, the risk is much higher at that period. All right, so now let's now look at 2023 and look at how real estate itself as an industry and as a sector performed. Now, in terms of performance, really, real estate was slow in 2023, and that have also trickled down into 2024 already. And when I say slow, I don't mean slow in terms of sales. People still buy. I still did a number of crazy transactions last year, and we're in 2024. Just the 2nd month of 2024, I've done several more than 10 transactions this year alone also. So it's not like maybe people are not buying. People are buying, but the market growth itself is slow compared to 2022, compared to 2021, and particularly compared to the COVID year 2020. It's quite still miraculous that a COVID year was almost when real estate had one of the fastest growth in Lagos and even in Nigeria. So 2023, the growth was quite slow, because there were like not so much excitement in 2023 compared to 2022 and 2021. You know, after COVID, there was so much excitement. There was so much exciting projects in the markets. We had Lagoon Funds, we had the Simi Lagos, we had the Tunu, we had Campbell Advantage, we had Urban Prime, we had a lot of excited projects. Dukia Africa, a lot of excited projects came into the market after COVID. You get? But for last year, the market was really quiet. Not so much excitement, not so much exciting projects were launched. Projects were launched here and there in Ekpe, in Bejuleki and the likes, but the excitement is not there, and that makes the market to be quite slow last year. And for appreciation, let's say still did a couple of very good growth in terms of appreciation, how property prices moved around Songutedu, how property prices moved around Ibejuleki, how property prices moved around Ekpe also, but that appreciation really can't really be very much encouraging, considering that a high number of our investors bought these properties with dollars, bought these properties with pounds, and bought these properties with euros converted to naira, basically. And when you look at the appreciation in naira and now compare it with maybe the equivalent value in dollars, in pounds, or in euros, is really nothing to write home about, basically. And that's also one of the reasons why the market was also very quiet last year, because a lot of our big investors, a lot of our frequent investors who are bringing in their money in dollars, bringing in their money in pounds, like held back because of the exchange rates, because of the fluctuations and the current devaluation. And a lot of them were constantly looking at what they had bought before and comparing it with what the current price is in naira right now, and they're looking at it that, man, this really is not really making any sense yet. All right. So, and I did a lot of videos last year really addressing that, talking about the strategies that you can do about compounding, strategies that you can do about going long term, and so on and so forth like that, because a lot of people have really just concluded in their mind and in their heart that investing in Nigeria or investing in Lagos real estate is a bad investment. All right. So, but financial decisions are really what is going to make you richer or what is going to make you poorer anyway. So it's one of the things that really affected the market so much last year, the exchange rate and the impact on the different investments that people have bought in 2022, in 2021, in 2020, and that affected the excitement and affected the sector itself and affected the growth of the sector. Despite that, some investors still went bullish last year. Despite that, the exchange rate was still the naira was still devaluating. A lot of people were still bringing in dollars, still bringing in pounds, and still buying properties, right? Because some people have been buying properties in like 2000, 2001, 2002, and have invested their money in pounds, their money in dollars, and they have seen how the real estate markets have performed. So a lot of them already have the experience, and they understand that you can't judge the market based on 2 years or based on 3 years. They understand that you can only judge the market based on its 7 to 10 years timeline, and they don't mind, they don't care. And that's what also which I've been teaching a lot of you guys. If you are collecting rent, you are collecting short let, compound it. Put it in another investment in naira. Don't take the money out and be converting it into dollar. It's not really going to get you encouraged, basically. So that's also another reason that affected the real estate sector last year. The exchange rates, low excitement, low exciting projects, and because a lot of the exciting projects that people bought 2 years ago, 3 years ago, a number of them are not even fully delivered yet. That's also another reason why a lot of people are just pulling back, particularly on off plan. Some people bought off plan 2021, 2022, and they're not really impressed with the progress of work there. And then 2023 came with subsidy out, with naira being floated, and with cost of construction going 70%, 100%, 120%, and it's now even getting tougher for developers to even still meet up. And a lot of people that are looking at it are like, I've done one, I've done two, I've done three, I'm not impressed, why should I do another one again? But there are some sectors in the real estate sector or the real estate market that did very, very well last year. And one of those sectors is the short-let market, particularly December. Almost everyone that had their apartment in Lekki Phase 1 in December was fully booked out. All hotels around December in Lekki Phase 1 in Ikeja GRA fully booked out. So the hospitality real estate still did very well last year, and they still boomed. And that's why I've always been telling you about diversifying. You know, if you do residential real estate, do commercial real estate, do hospitality real estate, do hostels, do co-living, just spread your portfolio basically, so that if whatever that is happening in the economy affect the particular market, you have another market that is booming and you're already positioned there and you're still going to take advantage. So the hospitality market did very, very well. Hotels, hotel apartments, short-let apartments, they did very good numbers November, December, January. So that market really did well, and that also increased the market demand for new projects, new flats, new apartments for short-let in prime areas in Lagos, Ikeja GRA, and even some new locations right now are also emerging for short-let. Festac, new apartments are coming up in Festac right now for short-let. Surulere, Yaba, several new apartments are coming up in those two axes now for short-let. Abule Egba, the same thing, and places like around Ibamadeson, Songotedo also. Several new apartments are also coming up across these locations also for short-let too. So the emerging locations also are starting to embrace the opportunities in the short-let market, just to provide investors with opportunities to also tap into the booming short-let space and the short-let sector. So the short-let market did very well, and the hospitality real estate in general did very well. Now also hostels also did very well last year too, because students, the number of students is still increasing, and this also pushing a high demand on real estate in the different locations, circle of locations around tertiary institutions, places around the Yaba, places like around Akoka, around Baiga, and different places around Ibadan, close to UI, different places around Ilorin, close to Uni Ilorin, places around Ife, close to OAU, places around close all these universities, basically either is the southwest, the south, the southeast, all the locations that are very close to these schools, they are still expressing a high demand, a surplus demand for hostels and for accommodations based on the number of students that are in those schools. So that's also creating a thriving market for investors to plug and play and meet up that demand and make a lot of money too. You know, people are building 70-unit hostels, 60-unit hostels, 50-unit hostels, and are still getting fully booked. So hostels is also another market that did very, very, very well last year also in the real estate sector. All right, so looking at the market quietness, the low excitement for last year, the inflation, the increase in cost of construction, and then the appreciation, not really like a valuable appreciation, particularly looking at how the exchange rate is gulping the entire appreciation that you may even get in Naira. So it's just look at it that, okay, for 2024 now, what can we do? We are already in 2024, we are already seeing some of the trends in 2023 have already spilled over into 2024. The cost of construction have even gone higher now. Maybe it's like 150% right now, higher in terms of construction right now. Cement, everything have gone up. And the inflation is still not like going flat yet. It's still rising. The exchange rate is not yet stable yet. It's still fluctuating. And the same thing is still affecting markets down till today. So like I said before, for off-plan particularly, you just can't rely on customer funds or client funds anymore. It's not possible. For any developer that is launching an off-plan project right now, fund must be available. Like the fund to build that project from scratch to finish must be available. You must have either is a loan, is an investor, is whoever that is financing it, must be on ground if you really plan to deliver that project. If that is not on ground, trust me, you're going to get hooked and get stuck. And apart from that, you are likely going to have a big fight and big disagreement with your investors, because you are likely going to have to go back to them and tell them that, sorry, I can't deliver at this price again, because whatever 50 million or whatever 53 million we have signed in the contract cannot just work again. So that's why you just have to even be more careful right now with the kind of developers that you are choosing. And if you know you don't have the high risk appetite, just try to buy off plan when it has been roofed or that are already at roofing stage, basically. But if you still want to make a lot of money, trust me, the biggest money right now is to buy it when it's still foundation, because by the time it's at roofing, I bought at foundation, you're already making like maybe 150% or 100% or minimum 60% of what you paid. And just imagine you bought a property as 200 million and at roofing, that property is like 350 million or 320 million. So there's still really so much opportunities there. So you just have to be really careful and look at what you can do, what you can tap into, and the available opportunities. All right. So if there's anything that you see in the industry in 2023, in the real estate stock sector in 2023, that I didn't mention that you'd like to add, feel free to do that. You can drop that in the comment section. I would like to hear your view, your perspective, how you feel real estate perform in 2023, your real estate portfolio. How do you look at it in 2023, and what do you feel? What are you predicting for what's going to happen in 2024? Now, if you have been watching our video once again, this is another call. This is another call for you to subscribe. We really need you to subscribe, because we have so much interesting topics, so many interesting guides to talk to you about, to educate you on about the real estate market, the real estate sector, and we don't want you to miss it. And one of the ways that you can also support us, one of the ways that you can really encourage what we do here, is to engage on our content, comment on our content, give us a like, drop a comment, share our content, and make sure you are also subscribed to this channel. It's very, very important. If you are not subscribed to this channel, that means you are not encouraging us, basically. So if you want to encourage us, first thing you have to do is subscribe. Second thing you have to do is turn on the notification button, and third thing you have to do is to engage on our content. Share this content, share it everywhere, on your Facebook, on your WhatsApp, on your groups, on your communities. Let people know that this is what we are doing, and this is the kind of content, valuable content that we are putting out there. All right, so I still remain your number one podcast on the planet, your property advisor, about the consultant, Rabi Mustafa. Thanks once again for watching our videos, and see you next time.